In today's episode, I'm going to share with you 5 reasons why most beginner traders lose money. Now, if you're a beginner trader and you're watching this episode, slow down. You know you've got the cards stacked against you. So if you're thinking about trading, you have to be asking yourself, what am I going to do differently from all the other people out there who are losing? Now, I'm kind of in a unique position where I can look back over the last nearly 25 years that I've been in and out of the market, and I can identify at this point 5 very specific reasons why most beginner traders will lose money. I'm going to share these reasons with you so you can address each one of these points. My hope is it helps increase the odds that you will make your way through the market and find some degree of success. It's no guarantee. We know that trading is risky, but I hope this episode helps at least open your eyes to the risks that are out there for beginner traders. Okay, so let's jump onto the screen share and start breaking it down. Why beginner traders lose money? Well, I hate to say it, but it's really pretty simple. The first reason is that they have no strategy. I used to say that there are 2 primary reasons traders would fail. I've expanded that now to 5 to give you a little bit more depth and clarity at the real struggles that traders face. But the first reason that I've always had is because they don't have a strategy. That was true with me. When I first came into the market, when I funded my first account in 2001, I had no strategy. Now, in those days, a lot of people told you, if you want to trade, just get to know 1 or 2 stocks really well and trade them every single day. But when I started trading, it was only 6 months, or not even 6 months, it was about 4 months after the pattern day trader rule had been put into place. This is a rule that came out of the dot-com bubble that said you needed to have a minimum of $25,000 in your account if you were going to day trade. And that was very interesting because that rule ended up preventing me from doing any active trading. And instead, I just bought positions of stocks and held and hoped. Well, that didn't work out so well. I had no idea what I was doing. I had no strategy. I had no system. I was shooting from the hip. But that's exactly what a lot of beginner traders do, even today. They come into the market, maybe they heard from a friend or they saw in the news or on social media something or other about the market. So you come into it, I get it, and you think, all right, well, where do I begin? And you typically start with whatever that person said. So if that person said, oh, I was on Reddit and I was following these stocks, that people are so excited about, you go onto Reddit and you might buy the next stock that people start talking about. You might have beginner's luck. And that's actually one of the worst things that can happen to you because it can instill a false sense of confidence that you know what you're doing when in fact it was just luck. So the first reason beginners fail is because they have no strategy. They don't have a system, they don't have a set of rules, they're just shooting from the hip, trying a little of this and a little of that. They're inconsistent with the way they approach the market, and therefore their results are inconsistent. Number 2, they've never back tested or traded in a sim. If you've back tested a strategy, what you can do is you can build a strategy out and then you can back test it against a certain set of data, and you can see whether or not that strategy would have made you money. Now, those backtest results have to always be taken with a grain of salt because what you can actually end up doing, and I found this myself when I tried to create my own algorithm, is that I would solve basically the perfect equation based on a specific set of data. And so I could always solve backwards to make a backtest that performs excellent in hindsight. But when that algo or that scan or that strategy would run forwards, it would not produce the same result. So the whole thing there was that I was sizing the strategy to fit around a set of data. So backtesting is valuable, but has to be taken with a grain of salt. And so the next thing you have to do, if you've backtested a strategy and proven it's profitable, is you trade it in a simulator with real money. Here's what I'll tell you, and I've said this for a long time. If you can't make money in a simulator, you've got no business putting real money on the line. And I know that hurts to hear. It's not what you want to hear. Many of you guys want to be jumping in and making money today. But that's the reality. You've got to pay your dues first. Obviously, I've been in the market for a long time, and for my first leg in the market for 10 years, I basically made nothing. I was a beginner trader. I was dabbling. I would jump in. I would try a little of this and that, and then I would leave, and then I would come back, and then I would leave and come back. It took me a long time before I finally got over the hump and turned the corner. Part of that for me was making the commitment that I was going to show up every single day, because when you do it, a little bit here and there, your progress is so incremental that then, you take 3 months off, you come back, and now you've missed a lot. what you can see here, and I love using this software where you can track your sim trading or your real money trading on a calendar. You can see this consistency, and that's what we want to see for simulated trading. You import all your metrics, you look at them, you analyze them, you ask yourself, what am I doing right? What am I doing wrong? You can use the exact same software that I'm using with real money. It doesn't matter that it's sim. You can go in there and you can pull your metrics. You can start asking yourself, what's working here? So for me, for the strategy that I trade every single day, and I'll just give you this little preview here. So this is year to date. This is my strategy. I've got so far total year to date, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red days in 10 months. So 1 red day a month average. But of course, I had a very long green streak here. I think it was 76 consecutive green days that spanned from the previous year all the way into May of this or March of this year. This is not by accident. You don't build a career on luck. This is because I follow a very specific strategy. Now, I'll share my strategy with you in a bit more detail as we go through this episode. I'm actually also going to put a link for you guys. I'll pin it to the top comments. If you want to download it, you're welcome to. It's a resource. It's called the Ultimate Beginner's Kit. And this is a kit with a bunch of different PDFs that will help you as you're learning how to trade. It's going to walk you through stock selection, strategy development. I'm going to share with you an outline of my strategy and a trading plan that you can begin practicing on your own today if you'd like. So you can check out those resources in the comments. They're totally free for you guys to use. So number 1 was no strategy. Number 2 is you've never back tested a strategy or sim traded. So you're jumping in real money, right? And listen, this is the reality. Brokers don't care. They're just happy that you're trading. With brokers, people are so excited about commission-free trading. The reason it's commission-free is because they make money the more you trade. So the more shares you trade, the more money they make. So they're not incentivizing you to pay your dues and go slow. These are publicly traded companies. They're thinking about Q1, Q2 profit revenue. They want you trading today. And they're going to incentivize you to trade today. They're going to encourage you to do that by, sort of this has been talked about quite a bit, the gamification of the market, how it's made so flashy and exciting, and that can cause you to deviate from a set of rules or get just completely distracted. So number 3, the third reason that most traders will lose money is because they can't follow rules. And this, to me, is one of the saddest things. I could give you my entire strategy. And in fact, I do for every member that's part of our Warrior Trading community. You guys all have my entire strategy. And yet not everyone will find success. Why is that? The strategy works. There's no question that it works. You see me trading it every single day. You see many other people trading it every single day. So the people that are struggling, they're struggling because possibly they don't have the aptitude for whatever reason to trade, but more likely they're not following the rules of the strategy. And in fact, even for myself, when I look at some of my biggest red days this year, it wasn't a flaw in the strategy. It was a flaw here. I got caught up in my own head. I got frustrated. I got stubborn, and things started to unwind. And I made a couple huge mistakes. Now, I was able to self-correct quickly and recover those losses, which is good. But nonetheless, the loss was the result of not following my own rules. So what's the point of gaining all this experience in the market? What's the point of having a strategy if you're not going to follow the rules of the strategy? I'm going to walk you through all these rules that I use in a few minutes. We'll come back to this. Number 4, beginner traders lose money because they become emotional about losses very easily. You can see me, I look a little emotional in that picture. Hey, again, I get it. I've been there. And I still go to that place of getting really emotional from time to time. The reality is losing money is not fun. So when you lose money, the initial response and reaction is anger, frustration, disappointment. Now, I've been able to condition myself to experience a large dollar amount loss without having a significant reaction. This is not much different than building your muscles in the gym. You can bench press 50 pounds, then 100, then 150, then 200. So, I'm over here in the trading world. I'm basically doing the equivalent of bench pressing 1,000 pounds, when I'm taking a $100,000 loss, right? And being able to just brush it off my shoulder. It took a long time to get here. Now, you already knew that from my physique, but just to be very clear about it, you have to build your emotional conditioning. You have to build your tolerance to experience and sustain loss. And so as a beginner trader, you come into the market with no strategy, having never sim traded, not having any rules to follow. And of course, when you lose, you're going to be emotional. You've never experienced losing before in the market. So it's an emotional experience. You get frustrated. And then what does that cause? Well, we call it emotional hijack, where you're trading just out of pure fear, greed, anger. You're completely emotionally compromised. Now, the fifth reason that traders lose money is simply because they lack self-confidence. And this is going to be very interesting. Self-confidence is so important. However, you could be very confident and completely ignorant and have no idea what you're doing, which could also be a mistake, and that can happen. Some traders gain a lot of confidence, but they don't really have any true competence to support that confidence. So it's a bit of an illusion. And yet, I do think that believing in yourself and believing in your strategy is still important. So for a trader like myself, or for a trader like you who's a beginner, where does self-confidence come from? It comes from having a strategy. It comes from having a strategy you've back-tested. You've traded in the sim. It comes from having the knowledge that you can follow your rules. And that's where you start. Okay, so if these are our 5 reasons why most traders lose, what are the solutions? No strategy, never back-tested, can't follow rules, becomes emotionally compromised very easily, lack of self-confidence. A big component here is the mental game involved in trading. So much of success in trading is up here. It's, yes, important. You have to have the skill. You've got to know how to use a computer. You've got to know how to use the software. Almost anyone can learn that, though. These are relatively basic skills. So what really determines success is going to be so much in your mindset. So let's talk about what happens for most traders. I'm going to walk you through my strategy. It's really sort of a 3-step system, and I'm going to teach it to you here sort of quickly, just in the high level, so you have an understanding of the way I approach the market every single day. So as a beginner trader, what typically happens is you come into the market and you lose money, right? You've got a poor track record. You don't have a strategy. And so if we jump on the whiteboard, on your first trade, so you're a beginner trader, and on trade number 1, what happens is you lose money. So what does that do? It triggers the emotion of feeling sad. And how do you alleviate this sad feeling? The fastest way is to make back whatever you lost as quickly as possible. How do you make it back? In the market? By taking more trades. So you increase the quantity of trades you take. But guess what? You don't have a strategy in the first place. So you know what's going to happen? You're going to lose more money. And then you're going to be even sadder. And then you're going to trade even more. You see where this is going. This is a downward spiral that will result in you losing your entire account. And it can happen, truthfully, it could happen in a matter of hours. So for most beginner traders, a poor track record fuels poor self-confidence, which increases pressure and desperation and leads to reckless trading, which then increases your losses and further hurts your track record. So let's look at this a different way. How do we sort of stop that cycle as early as possible? Well, the first element of risk management, in my mind, reducing your risk as a trader, is trading A-quality stocks. Now, I trade stocks. If you trade, cryptocurrency or Forex or futures, it's trading something that is A-quality based on your strategy. Now, when you trade something that's higher quality, you're going to have higher accuracy. This goes hand in hand. Quality, right? It's quality or quantity. You're going to have fewer trades, but you're going to have higher accuracy. Now, because you've eliminated some of those unnecessary losses, which were probably coming from B or C quality setups, you're going to have a better profit to loss ratio. This is the relationship of your average winners versus your average losers. With a better profit to loss ratio, you're going to be more consistent and you're going to be making more money. Now, wait a second. If you're making more money, that's going to build what? A solid track record. Now you've got a track record. Now you're building self-confidence. You're taking more size on all of your trades and you're making even more money. This is a positive feedback loop. And this is what I want to see you guys on, the positive feedback loop. So where does it begin? How do I find the strongest stocks each day? How do I choose a strategy? There's a million strategies out there you could choose from. I'm going to share mine with you here today, so you get an understanding of the way I approach the market. This, again, is all documented in my Ultimate Beginner's Kit, which you guys can download. The link is in the comments, and it's pinned to the top of it's in the very top of the description of this episode as well. So when you guys do the Ultimate Beginner's Kit, you'll be able to download my stock selection PDF. So you can basically have a printout. It's a PDF, you can print it out, of everything that I talk about today, but it's going to go into more details that I don't want to spend the whole episode kind of getting into the nuance. So make sure you guys download those resources. So step one each day for me is pulling up my scanners. And so today, for example, we're going to use today as a case study, and I'm going to talk about my trades from today because I think today really is one of these examples of what separates the long-term successful traders from those that end up blowing up their accounts. I was trying to think about what to talk about today during, as I was finishing my morning trading and preparing to do my recap, because today's a very small green day. And I thought, now a lot of people are going to look at this and think, oh, Ross, you don't have a lot of profit for today. And I thought, well, that's true, but there's a bigger story here, and the story is that this could have been a big red day. In fact, 5 years ago, 10 years ago, in my own trading, it probably would have been. But I've gotten to a point in my trading where I've gotten better at recognizing the red flags in the market and learning how to step off. And that's a really important skill to learn. And that's all part of that will be part of the rules of your strategy. So step one each day is finding a stock on the scanners. So if I pull up my scanners right here, this morning, one of the first stocks that I saw was AREB. And you could see it right here, AREB. This is a stock that currently is up about 28% on the day right now. It's not currently the leading gainer. It was up here at 350, and you can see now it's back down at 277. So it sort of popped up and then pulled back. But this is a stock that has definitely been in favor among traders. It's sort of in this theme a little bit of meme stocks. It has been trending a bit on Reddit and social media, which is fine. You know, I have to have a strategy for how I'm going to trade it. I don't just buy it and hope it goes to 100 or 400 like GameStop. I have to have a real strategy behind the way I'm going to approach it. So when I first sat down, I saw that this stock was one of the leading gainers on the scan. And so from that point, I now have a sense of what direction to look in. Now, on this particular day here on this slide, you can see the leading gainer was ATNF. This is a stock, that's the ticker, that was up nearly 600%, 58 million shares of volume. It's got a 1 million share float, which is the number of shares available to trade. This stock is a biotech stock with news, and this move was unbelievable. This was an incredible day. So the first step each day for my strategy is to find a stock moving. Now, as I mentioned, as a beginner, when I first got into the market, a lot of people said just find one stock and get to know it and trade it every single day. But what I learned pretty early on was that the only way to make good money doing that is if you already had a lot of money. Because a typical stock like Apple, Netflix, Tesla today, for instance, these stocks move every day, but they're also really expensive. So the only way to make money on what ultimately are, 0.5% or maybe 1% move is to take a very large position size in dollar amount. And I couldn't do that with a small account as a beginner trader. Most retail traders can't. So this idea of just get to know one stock and trade it every single day, that doesn't work for most retail traders unless they've, for somehow have inherited and have a huge account. So for the rest of us, we got to find stocks that are a little more volatile. This is the trade-off. If you have a small account, let's say $1,000, and you want to grow the account by $50 or maybe $100 a day, I mean, that's big growth. 10% a day, you need to buy a stock that has the potential to go up 50%, because you're never going to capture the full 50% move. But if you can capture 10% of that, 1/5 of that move, well, that's something you could work with. So step one is to find these big gainers, because these are the stocks that most retail traders are focusing on. And they may not be talking about them on CNBC or Bloomberg or whatever, but these are the stocks that clearly have millions of shares of volume, and this is what traders with smaller accounts are focusing on, which many of you probably already realize. So my 5 criteria that I use every single morning to help me evaluate whether or not I should take a trade is I ask myself if it's exhibiting high levels of demand. And that'll be through the stock being up 10% on the day, the stock trading on 5 times higher volume today than its 50-day average. It'll be identified, or we'll recognize it by the fact that there's a news event, some type of breaking news that's moving the stock higher. And if the stock is priced between 2 and 20, there's a good chance that retail traders with smaller accounts are going to be more interested in it, which means it'll have more volume. These are 4 characteristics of demand, and this right here is a characteristic of supply. And this creates an imbalance between supply and demand, which results in a big move. The supply should be that there's less than 10 million shares available to trade. Now, that's not a hard set rule. There are times where I'll trade 15, 20 million, or maybe even a little higher. But typically, lower supply is important to create this big imbalance between supply and demand. So once I've identified a stock on my scanners that meets these criteria, right? That's the first step. I've got to make sure that the stock that's on the scanner meets these criteria. We've got the change from yesterday. They're all up more than 10%. We've got the float, the number of shares available to trade. We've got the relative volume, which for all except for this one is above 5. And then we check to see what the news catalyst is. And of course, we check to see what the price is. So once we confirm the stock meets all 5 pillars of stock selection, then really I just start looking at the chart and I wait for a pullback. And it's that simple. That's my strategy. I wait for stocks that have squeezed up to do a dip, and then I buy the dip. Dip down, buy the dip, and then buy the dip, and buy the dip, and buy the dip. Most of these stocks trade in this kind of, these ascending waves. They just move a little higher, a little higher, a little higher. So if you buy at the top of the wave, you may have to hold through the next pullback. And it might be your misfortune that you bought at the very top of the so-called high tide, and now it's starting to roll back down. But if it's continuing to move higher, then it'll make a new high. You buy the pullback, make a new high. You buy the pullback, make a new high. And this is the strategy that I trade every single day. However, this only applies to stocks that meet all 5 pillars of stock selection. If I try to apply this to a stock that doesn't meet those 5 pillars, I'm going to lose money. If I try to do this on Bank of America or Ford or even the S&P 500 on any typical day, you're not going to have these really nice, smooth waves of price action. These are fueled by emotion in the market. Traders who are eagerly buying as it's moving higher and then taking a little profit. And then it goes for the next wave up and I'm going in for the next one and then pulling back. And that's the pattern that repeats itself again and again and again. It's all about waiting for this pullback. Typically, the precise entry point is going to be the first candle that makes a new high. So it'd be this green candle as it breaks the high of this red candle, with your max loss being the low of the pullback. Now, once we've got the stock that we found that we like, we've chosen, we've made sure we've identified a pattern. Step 3 is executing the trade, which means actually pressing the buy and sell button, which I'm going to do right here. But of course, it depends which broker you're using, but your buy and sell buttons are going to be fairly similar. And then following the rules of your strategy. Now you can see on this day, I made over $80,000 in just one day on ATNF. I was up 98,000 on the day. That's just one day. And this is, when I first started trading, I recognize that I have a lot to be grateful for. When I first started trading, you know what my daily goal was? Really, to be honest, if I could just be green, I was happy. But realistically, I was trying to make $200 a day. $200 a day, I was figuring about $1,000 a week, $52,000 a year. And that for me, living, rural kind of farm country in Vermont, I felt like that was a good living. That's all I wanted. And that was a lot. It took me years to be able to produce that consistently. And I'm going to share with you the blessing and the curse of the market. And then I'm going to teach you the rules that I follow. Here's the blessing and the curse. You can spend years struggling unsuccessfully to make even just $100 a day. And it feels like you're not being greedy. You're not asking for that much. You're not asking for the Lamborghini and the private jet and da-da-da-da. You're just trying to make $100 a day. That's it. Why is this so hard? Here's the blessing. Once you're making $100 a day, the only thing stopping you from going to 200, 400, 600, 800, 1,000, 2,000, 98,000 is increasing your share size. So it's incredibly frustrating because you'll spend all this time grinding, making basically nothing. And then all of a sudden you start making little, and then it really accelerates. And at that point, your biggest limitation will be your own risk tolerance of how much you're willing to lose in one day. Because to make 100 grand in one day, clearly you've got to take some risk. So we've got to talk about the rules, the important trading rules. As a beginner, It's so important that you put restrictions on your account, including a max position size and a max loss. These are your guardrails. And now, because it's so important to build your self-confidence, every single day when I sit down, I'm thinking, okay, how much am I willing to lose today? I think about how much I'm willing to lose and I work from that point backwards. If I'm willing to lose $500 and I'm genuinely okay with this being a $500 red day, then that's my max loss. And I say, what's the max position that I can take and still be risking only $500? It's not going to be 50,000 shares. There's no way. Maybe 5,000 shares, right? 10 cents a share, 500 bucks, maybe. So 5,000 share could be my max position size. I set that guardrail on my account. And then when I start trading, do I take 5,000 shares on my first trade? No, because if I lose on trade one, I'm out of the game before I hardly even started. So I take smaller size on my first few trades until I'm up 50, 100, 150, $200. Likely, if the most I'm willing to risk and lose is $500, then my daily goal is probably going to be between 500 and 1,000, either one time what I'm risking or two times what I'm risking, more or less. Now, you don't want to be red, 50% of the days. You want to be red maybe only once a week, typically. So by approaching the day, by first building a cushion with small size, what I'm doing here is I'm minimizing my downside, because if I lose with quarter size on those first couple trades, the amount that I'm losing is tolerable, it's negligible, I can afford it, I can handle it. And if I end up having 3 or 4 losses in a row, then it's like, all right, I'm glad I stayed with small size. So I only increase my size if I've built my cushion. Now I also walk away if I lose half of my daily gain at any time. So if I've hit, $200, $300, $400 and I give back half, that's when it's time to walk away before you give back profit. Why? Because green days are so important for building self-confidence. Remember how important mindset is. So a lot of these days I was green by, 2, 3, 4x what I was risking. And then I gave back a little and I said, that's it, I'm walking away, because I don't dare keep trading and go red. It's super important. Now, certainly if I hit my max loss, I do have to walk away. And that's going to be set with the broker. So once my account is down below max loss, I can't take any more trades, even if I wanted to. So I'm out of the game for the rest of the day. And that's fine. Live to trade another day. And I do not come back after I've left. That means I stop watching. Because if I keep looking at the market, I'm going to be tempted to come back, especially if I see something that made a big move. Now, when it comes to today's trades, this is actually a sort of a good segue here, because today was one of those days where we had the stock hit the scans, which was AREB, and it just didn't really work. You can see how it had this resistance level up here at 355. So the way I focused on trading this was, it was early in the day. I didn't have a very big cushion at all. My P&L, you can see right here, I'm up 2,400 bucks. So I was up so far on the day, just 378 on a different trade. And then when I saw AERB pop up, it popped up right here and I bought this micro pullback, which is that pattern that we talk about. So I got in right here, but not with a full size position. I didn't have enough of a cushion to take that risk. So I was still trading with smaller size. It goes up to here, it goes up to here, and I take my profit. Then I add back right here, it rejects, and I lost a couple $100. And I was like, you know what? All right, that's it. And that is so important, because I said, you know what? The writing is on the wall. I'm done. And I'm not going to average down on a trade. I'm just going to say, you know what? That's it. Walk away, cut it. Because if it's not working, if we're not seeing things moving higher, if I'm not building my cushion, this isn't the day to take risk. Save it for the next day. So having that kind of long outlook is so helpful, because you realize there's no single trade today that's worth going and getting bent out of shape over. It's just not worth it. There will be another trade around the corner. There will be another 500,000% move around the corner. So I didn't get one today. Doesn't matter. I survived. Survive till you thrive. Number 6, if a voice says to yourself, I should probably be stopping here, you need to learn to listen to it. Listen to it and walk away, because if you don't, that's when things get really bad. All of this is a high-level overview of what's included in the Ultimate Beginner's Kit, which I really encourage you guys to download. Now, those of you guys that are really interested in learning more about my strategy, I'm going to put a link to my Ultimate Small Account Growth Strategy. This is an episode I just recorded about a month ago that's been really popular, and it goes into some of what I shared today in more depth as well. Now, if you want to watch me while I'm trading live, You can tune in anytime you'd like. We offer a 2-week trial here at Warrior Trading. It's 2 weeks for $20. You can watch over my shoulder. You can use the same software that I use every single day that's called Day Trade Dash. So you can practice using the charts, the scan, the news feed. It's all real-time data. You'll be in the chat room where you can chat with me and all the other traders. And you can really get a sense of what it's like to be immersed in a community of traders who are all focused on doing this the right way. Okay, so I hope you guys really enjoyed this episode. If you did and you haven't already, smash that thumbs up for me. I hope you subscribe to the channel, and I will see you for the next upload real soon. Reminder as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and I'll see you real soon.